Well, let's take a closer look at why Nigeria isn't seeing any inflows just yet. CCTV's Deji Badmus talks to a Lagos investment banker.
One factor we have to recognize is that the further shortfall in production, crude production, was not envisaged. I said we've seen a drastic reduction in production, in crude production, as a result of the Avengers, Nigeria Delta Avengers. So, in the first place, for us to stabilize the exchange rate at both the interbank market and the parallel market, there has to be enough supply to meet the current demand. And that supply at the onset will have to come from central bank, because the alternative sources of inflow that we are all expect to come up will take some time to mature. The other alternative sources of inflow, for instance, the foreign portfolio investors are still watching the economy. They are still watching for what we may call the price to see the rate at which the naira will settle. And naira is still going through a process of price formation. So it's only when we have some level of stability in exchange rate that the foreign portfolio investors begin to come back. Today, yield on Nigerian government instruments are quite attractive. But because we are still seeing fluctuations, and that fluctuation will only be addressed if the supply from CBN is sufficient at the onset to stabilize the exchange rate.
Now, when are we likely going to see these inflows start coming in droves? Could you put a time frame to it?
A couple of things have to fall into place. One, and like I mentioned, we need to quickly address the crisis in the Niger Delta so that Nigeria's oil crude production will improve. At $45 to $50 per barrel, remember the benchmark for the crude in the budget was about $38. Ordinarily, we should be talking about excess crude today. But unfortunately, whatever price variance we're enjoying is far more than offset by the negative volume variance we are suffering. So we are unable to earn enough to meet the budget obligations. If we can address the issues of the Avengers and multiple militant groups in the Niger Delta, and then go back to our projected production about 2.3 million barrels per day, we are likely going to have enough foreign exchange earnings being supplied from central bank to the interbank market to stabilize the exchange rate. If you have enough supply in the interbank market, even the parallel market will adjust accordingly.
The BDCs have been making a very strong case for themselves. We've seen some BDC operators come out to say that the central bank should bring them in, that once they are brought in, that could help to stabilize the exchange rate and help in resolving that supply gap. Do you share that view?
If it was to say that the BDCs are going to attract their own autonomous sources of effects, and then I will agree with them. But ultimately, when the central bank has the capacity to supply the market, that is when the central bank will say, okay, if we increase the outlets, with the BDCs will help to do by selling to the BDCs. So in that case, you're increasing the outlet for the sale of dollar. Then automatically, because there are multiple supply sources, and then supply will almost meet up or possibly outstrip demand, then that's when the BDCs will be relevant in bringing down the exchange rate. But the key thing now we have is supply. The channels of delivery of the supply is not yet the problem.